Hi, I'm Debbie Shaw-Kidd, and I'm the Fayette County Treasurer, and I'm here today to talk about property taxes and their effects on local citizens. And last night in the City Council meeting where they met to discuss the local option income tax, which is a way for counties to reduce the property tax burden to the taxpayer and offset that with those local option income tax dollars. So last night when I was talking to the council, I just gave them some facts and figures concerning property taxes. And what I had kind of based these on were a residential home with an assessed valuation of $75,000 that has a homestead and a mortgage exemption, and those folks are paying $830 a year for their taxes. Now, based on this newer formula where, and this is strictly based on this year's rates, and we don't know what the rates will do, they vary by year. The homestead credit that the state gives you and the homestead and the property tax replacement credit varies by year. So there's a lot of variables which makes obviously the property tax situation pretty complex to try to see how certain things are going to affect it. But just based on that being 34% less based on the adoption of a local option income tax of 1%. And based on a median household income in Fayette County at right around $40,000, they would be paying out in local option income tax over a year $400. Their savings of 34% on their property taxes would be $282. Overall, based on that scenario, they would pay $117 more per year. Now, the $117 would come out of their paychecks versus having to be paid out with their property tax, but it would be a property tax reduction. Now, also in looking at that, some of the city council members were approached by rental property owners in the town, and I just based what they would pay for a $75,000 property. They wouldn't get any exemptions. So instead of what a resident homeowner would pay $830 or thereabouts, for the same piece of property, the people who own the rental properties would be paying $2,272 a year for that same house if they were using it as a rental income. Now, based on the 34% reduction from the local option income tax, that would reduce that tax liability by $772 a year, bringing their tax down from $2,272 to $1,500 a year, which still seems like quite a lot, but it would be much more manageable. Now, I think we do have to think in this equation when we are benefiting the owner-occupied homes, which are eligible for your homestead credit, versus the ones that are owned by, say you have inherited a home in your family, and you have your own home and you have this other home. You're not going to be eligible for exemptions on that second home, or that second piece of property. So those people would be benefiting from that too. We also ran through a little equation here that, say you have a pension income and your pension would be taxable under this local option income tax, and if your pension was $1,000 a month, so you're going to have an overall pension income for the year of $12,000, probably subsidized by your Social Security income. Your Social Security income would not be taxable under this local option income tax. So if we're given that same equation and you have a $75,000 home and you have a $12,000 income from pension, you're going to be paying $120 a month, $120 annually increase in your income tax that's going to go to the county to reduce your taxes, whereas you would benefit by a $282 reduction in that. So overall, your overall tax, looking at both those two taxes, is going to be a reduction of $162. So that is the thought, that we are going to be helping the people who are on fixed incomes, especially those on Social Security incomes. They want to stay in their home, they want to be able to maintain their home, and they also want to be able to pay the property taxes. Now let's also look at the scenario where we have a family that has a more expensive home. I say expensive, let's just say a higher assessed valuation on their property, and they're getting a homestead deduction and a mortgage deduction, and their taxes are running $2,400 a year. Therefore, they're basically paying $200 a month just for property taxes for their home. Let's just say that couple is making $80,000 a year combined income. That's their household income. So based on this scenario, they would be paying $800 in local option income tax, and their savings would be about $800 on their property tax. At that point, they're pretty much break even between the two. The difference is they're not seeing the sticker shock of getting a bill that says they owe $1,200 each half. They're going to be looking at owing $800 each half. So that, that's also, I think, a fairly typical scenario within the city. Now in the county, where the rates are different, it pretty much changes somewhat. If we go back to the $75,000 assessed valuation, you own property, and I just picked Jennings Township, and you make the median household income of $40,000, your local option income tax is going to be $400. You are going to have a reduction in property tax of $164. So in that case, you're going to be paying a little more overall. But the idea is to benefit. There's really not going to be a perfect solution that is going to benefit everybody unilaterally. They're looking at they're just trying to see what benefits us the most and how we can get a reduction and try to target certain groups. One thing I know the concern was for those on a fixed income. And this scenario would help those. It would also reduce the tax liability for those that own rental properties. And there have been many of those property owners that have been faced with foreclosures, that type of thing, property tax sales, if they get behind on the taxes. They've had a reduction, they tell us, in their occupancy rate, which has really affected the amount of money they have coming in. Just because you don't have an occupant in those homes doesn't mean that you're not going to have to come down and pay your property taxes on it. To summarize what we've talked about, the local option income tax, it's really going to benefit those that are on fixed incomes, and it's going to benefit landlords. It's targeted towards residential properties. It's not going to be a reduction to business properties, commercial properties, industrial properties. Those are excluded from any tax relief in this. This is based strictly on residential, on homes. And the other person it's going to help is those that have a fairly large tax bill. They're going to see an overall decrease, and they'll probably pretty much break even if they're not ahead. So it's going to give them tax relief also. Again, I would urge everyone to, in this time when I know the legislation is going to be working, the state legislation is going to be working in the next upcoming sessions on getting property tax relief. And there's a lot of different ideas floating around. I know the governor has published his own options for reducing the property tax, what they're seeing as crisis in Indiana. And just watch those things. Don't just sit at home and watch the TV broadcast of your local meetings, or as I'm standing here talking to you about it. That's after the fact. You need to be actively involved. Contact your legislator, your senator, your representative, and discuss these options with them. I think it helps if the homeowners go and tell them how it's affecting them, if it's affecting them being able to, their lifestyle, their comfort, you know, those type of things. So I think they need to hear from you. We can talk to them all day long, but I think it means a lot more coming from you. If you have other questions about your property tax, or I want to remind everyone to please be sure if you're eligible for a homestead exemption, be sure that you file one. If you're not sure whether you have one, give us a call. We'll look it up. And there may be other exemptions that you qualify for. The auditor's office handles the exemptions. We collect and we collect the tax in the treasurer's office. And if you have any questions, just give us a call, 825-1013.